Hello viewers, welcome to my channel. I am Hasham. Presently I am giving the lectures on this topic budgets and budgetary control. Already 5 problems I have solved in the previous videos. So if you have watched the previous videos, definitely you got a good command on the topic of budget and budgetary control. So if you have not watched the earlier videos, please, my suggestion, go to the playlist of my channel, select the subject Managerial Accounting. In that subject, select the topic budget and budgetary control. First, watch the introduction theoretical part. Without understanding the meaning, the concept of budget, it will be difficult for you to understand. So starting first 2 videos are very important. The basics of budgets I have given in the first 2 videos. Already 5 problems we have solved on budget. Now I am going to start the next problem number 6. But before starting the problem, I expect my viewers to have a printout of the problems. I have given the problems in the link under my description. So take a printout of all the problems, keep it ready before watching the video of problems. So if you are new to my channel, I suggest you to please visit the playlist of my channel. I have uploaded so many subjects videos of financial accounting, advanced accounting, cost accounting, corporate accounting, business statistics, income tax, financial management, investment management, so many videos for MBA, MCOM, MBBA. For all these courses I have uploaded the subjects. So select the subject, select the topic, watch the video, definitely you will get a lot of confidence on the subjects. Now I am going to start the next problem, that is problem number 6. UP Agro Industries Limited manufactures pickles and juices. So 2 products, pickles and juices. The sales department has prepared the following forecast for the 6 months of 1990. Pickles, number of bottles. So these are the sales forecast, budgeted sales. So how many bottles of pickles and juices the company can be able to sell. So pickles, number of bottles, mango 1 lakh bottles, mixed 75,000. So 2 grades, 2 variants of pickles are there, mango pickle and mixed pickle. So 1 lakh bottles of mango pickle, 75,000 mixed pickle. Juices, apple, mango, pineapple. The number of bottles for apple 25,000, mango 15,000, pineapple 35,000. These are the budgeted sales for all the products. The inventory levels have been determined as under. Inventory means stock. The stock levels are given. Here the new point given in the problem is work in progress. The work in progress is called semi-finished goods. Partly completed, partly not completed. So we have 2 types of stock. Stock of work in progress and stock of finished goods. Right? The stock of work in progress. Here it is given units percentage completed, opening, closing. The pickles. Now carefully you see pickles, mango. Units, number of units opening 25,000, closing 40,000. These are in work in progress. In which percentage completed? Percentage completed 80%. So 80% work is completed. So how many units are there in opening? 25,000. So 25,000 units are there which are in work in progress. The work is still going on 25,000 bottles. But 80% completed. So we have to find out equivalent finished product. That means 25,000 incomplete units and 80% of work is completed. 80% of work is completed. So we calculate 80% of 25,000 units. So we get equivalent units in opening WIP. Similarly, closing WIP. Closing WIP is given 40,000 units and percentage completed is 60%. The closing stock of WIP is 40,000 units on which 60% is completed. So we calculate 60% of 40,000. 60% of 40,000. That will be called equivalent production, equivalent units. So the new point in this problem is we are given the percentage completed and units in opening and closing. So multiply the percentage with units to get equivalent units. So we have equivalent units in WIP opening and WIP closing. Then finished goods opening closing are given. The production in each month is expected to be uniform. Prepare production budget for 6 months. Now, see here, budgeted production, the formula is budgeted sales plus closing stock minus opening stock. Stock means we have two types of stock in this problem. The stock of work in progress and the stock of finished goods. So what is the equation formula? Budgeted production is equal to budgeted sales plus closing stock. So closing stock of finished goods and closing stock of WIP, both we have to add. Similarly, minus opening stock. So minus opening stock of finished goods and minus opening stock of work in progress. So we have two stocks, finished goods and WIP. So while adding the closing stock, add both. Add both closing stock of finished goods and closing stock of WIP. When subtracting, subtract both opening stock of opening stock of WIP and opening stock of finished goods. That is the new problem. So equivalent units, how to calculate? Percentage. Percentage work completed into number of units. You will get equivalent units. See here, UP Agro Industries Limited production budget for 6 months. Pickles, mango mixed. Juices, apple, mango, pineapple. So these are the different products. First we take budgeted sales. Budgeted sales are given in the problem. First line it is given, mango 1 lakh mixed to 75,000. Mango 1 lakh mixed to 75,000. Apple 25, 15, 35. 25,000, 15,000, 35. So budgeted sales are directly given. To this we add closing stock. The closing stock of finished goods. The closing stock of finished goods are directly given in the problem. Finished goods closing 6,000, 2,000. Here I have taken 6,000, 2,000. Then 2,500, 2,000. 2,500, 2,000. Directly without any calculations, simply I have taken the values from the problem. Closing stock of finished goods. Now closing stock of WIP. This is the new point. Closing stock of WIP. So here closing stock, work in progress closing stocks are given 40,000, 25,000, 4,000, 3,000, 5,000. Closing stock. This should be multiplied with percentage of work completed. Here percentage of work completed closing 60, 80, 75, 80, 80. So multiply 40,000 into 60%. You will get 24,000. 40,000 into 60%. Similarly 25,000 into 80%. You will get 20,000. So multiply the percentage of work completed closing into closing units. You will get equivalent units of closing work in progress. Now we have closing stock of finished goods, closing stock of WIP. Add up. Add both closing stock total. Minus opening stock of finished goods are directly given in the problem. Opening stock of finished goods 7,500, 3,000, 1,500. 7,500, 3,000, 1,500 and then 800, 2,000. 800, 2,000. Directly without any calculation it is given. Opening stock of finished goods. Now opening stock of WIP, work in progress. So here work in progress is given opening. Opening work in progress units are 25,000, 15,000, 5,000, 3,000, 4,000. Here opening stock units. This will be multiplied with percentage of work completed in opening. Opening percentage of work completed are 80%, 60%, 80%, 70%, 75%. Multiply 25,000 into 80%, 15,000 into 60%. You will get these values. 20,000, 9,000, 4,000, 2,100, 3,000. I am putting in bracket. Bracket denote subtraction, minus. So both the brackets will be deducted. 1,30,000 minus 7,500 minus 20,000 you will get 1,02,500. Similarly 97,000 minus 3,000 minus 9,000 85,000. This is the budgeted production in units. That's all. This is the end of problem number 6. Now see the 7th problem. Problem number 7. From the following figures, prepare raw material purchase budget. So far we have prepared two budgets, that is production budget and sales budget. This is the first problem where we have to make a new budget called purchases budget. Now See here, production depends on sales. Production depends on sales and purchases depends on production. Purchase of raw material depends on production. If we make more production, more purchase of raw material. If the production is less purchase of raw material. The purchase of raw material depends on production. The formula is very much same. Budgeted purchases is equal to budgeted production plus closing stock of material minus opening stock of material. Exactly similar, just like the production budget. Budgeted purchases is equal to budgeted production add closing stock of raw material minus opening stock of raw material, just like the previous one. Here the data is given: raw material purchase budget, material in units, A, B, C, D, E, F. 6 types of materials are there, A, B, C, D, E, F. Estimated stock on January 1st, opening stock. Estimated stock on January 31st, closing stock. So 1 month data is given: 1st January, 31st January. 1st January opening stock, 31st January closing stock. Estimated consumption means material required for production. Estimated consumption means material required for production. And then standard price per unit. For 1 unit, what is the price of material? So we have to make both quantitative budget in units and monetary budget in rupees. Both we have to calculate. See here, raw material purchase budget for the month of January 1987. First column material, A, B, C, D, E, F. Second, estimated consumption. Estimated consumption means material required for production. The material required for production is given in the problem. Estimated consumption. Closing stock, add. Closing stock means stock on 31st January given in the problem. Same thing I have taken. Opening stock. It is given in the problem. The stock on 1st January, opening stock. Then estimated consumption. Here formula I have written. Budgeted purchases is equal to estimated consumption in units plus closing stock in units minus opening stock in units. So estimated consumption here plus closing stock. 1,20,000 plus 20,000 minus 16,000. 1,24,000. Similarly, 44,000 plus 8,000 minus 6,000. 46. 1,32,000 plus 28 minus 24. 1,36. The estimated purchases we got. Estimated purchases or budgeted purchases in units. This is the quantitative budget. Budgeted purchases in units. Now standard price per unit is given. For 1 unit, how many paisa? It is given 25 paisa. 25 paisa means 0.25 rupee. Because 100 paisa is equal to 1 rupee. 100 paisa is equal to 1 rupee. So 25 paisa means rupees 0.25. Rupees 0.25. Secondly, 5 paisa. 5 paisa का मतलब 0.05 rupee. Rupees 0.05. 5 paisa. Then 15 paisa, 0.15 rupee. Then 10 paisa, 0.10 rupee. 20 paisa, 0.20 rupee. Then 30 paisa, 0.30 rupee. So we have converted paisa into rupee. So instead of writing 10 paisa, we can write down 0.10. 20 paisa, 0.20. 5 paisa, 0.05. Now multiply. Estimated purchases multiply with price. 1,24,000 into 0.25. 31,000 rupees. This is the estimated cost of purchases. Estimated cost of purchases. So multiply 1,24,000 into 0.25, 31,000. 46,000 into 0.05, 2,300. 1,36,000 into 0.15, 20,400. Take the total of the purchase cost. The budgeted purchase cost is 1,28,300. This is the budgeted purchase cost. So in this problem, we have prepared a new budget called purchases budget. Now see the 8th problem. Problem number 8. The sales director of a manufacturing reports that next year he expects to sell 54,000 units of a certain product. The sales director of a company expect that next year he can be able to make a sale of 54,000 units. This is the budgeted sales. The production manager consults the storekeeper and casts his figure as follows. Two kinds of raw material A and B are required for manufacturing the product. For making one unit, we are using two raw material. The raw material are A material and B material. Then each unit of product required 2 units of A and 3 units of B. For making 1 unit of finished product, we require 2 units of raw material A and 3 units of raw material B. When we combine 2 units of raw material A and 3 units of raw material B, then we can get 1 unit of finished product. 1 unit of finished product. The estimated opening balances at the commencement of the next year are. So here we are given the opening balances, opening stock. The opening stock of finished product 10,000 units, raw material A opening stock 12,000 units, raw material B opening stock 15,000 units. Similarly, the desirable closing balances at the end of the next year. That means closing balances and opening balances are given, opening stock and closing stock. The closing stock finished product 14,000 units, A closing stock 13,000 units, B closing stock 16,000. Draw a quantitative chart showing the material purchase budget for the next year. Now see, we are required to make the material purchase budget. Purchase depends on production. Production depends on sales, and sales are given in the problem. So by using the sales, we can find out the production. By using the production, we can find out the purchase. And we are required to make a quantitative budget. We don't have any rupee value here. All the units values are given. See here. So ultimately we have to make purchase budget. For purchase budget, we need production budget. So first of all, I am finding out the production budget. First of all, I am calculating the production budget. So budgeted production is equal to, already previous problem we have applied the formula. Budgeted production is equal to budgeted sales in units plus closing stock in units minus opening stock units. Last 2-3 problems we have applied this. Budgeted production is equal to budgeted sales plus closing stock minus opening stock. Budgeted sales are given in the problem 54,000, and the closing stock and opening stock is given in the last line, finished product. We need finished product, finished output, closing stock and opening stock. Here it is given closing stock of finished goods 14,000. 14,000 is the closing stock, and opening stock of finished product is 10,000. So 10,000 is the opening stock. So 54,000 plus 14,000 minus 10,000. 58,000 is the budgeted production. The budgeted production is 58,000. We have to produce 58,000 units. Now we will calculate the material purchase budget. Material purchase budget. So material A, material B. Two types of material. Material required for production. How many units we are going to make finished production? 58,000. And how many units of raw material A we require to make 1 unit of finished product? For making 1 unit of finished product, we require 2 units of material A. It is given in the problem. 2 units of material A. So we multiply 58,000 into 2. 1,16,000 is the material A required for production. Similarly, B material. For making 1 unit of finished product, we require 3 units of material B. So multiply 58,000 into 3. 1,74,000 is the total material B we require. So for making 58,000 units of finished product, we require A raw material 1,16,000, B raw material 1,70,000. This is the material required. To this we add closing stock of raw material and subtract opening stock of raw material. The closing stock of raw material is given in the last line. The desirable closing balances A 13,000, B 16,000. A 13,000, B 16,000. Closing stock of raw material. Now you add up. You will get 129, 190. Minus opening stock of raw material. Opening stock of raw material is also given A 12,000, B 15,000. 12,000, 15,000, subtract. Budgeted purchase are 1,17,000 units of material A. and 1,75,000 units of material B. That's it. This is the end of problem number 8. So far 8 problems I've completed explaining each and every concept on budget and budgetary control. So if you are satisfied with my lecture, give a like to the video. So subscribe my channel if you have not yet subscribed. Share it in your group, in your friend circle, so that more students can watch these videos. And lastly, give the feedback, give your comments on these videos. We'll continue the next problem in the next video.